Tonight, the American economy faces a stark new reality, one that has been looming on the horizon for some time. The unemployment rate has surged to a 4-year high, sending shockwaves from Wall Street to Main Street, affecting every corner of the nation. For months, the labor market defied predictions, showing unexpected strength, but that resilience has now reached its limit, leaving many in uncertainty. This isn't just another statistic, it's a flashing warning light for our economy, a signal that demands our attention and action. The era of abundant jobs and rapid hiring is ending, marking a significant shift in the economic landscape. The Department of Labor's report confirms what many feared. Unemployment is at its highest since late 2021, a sobering reminder of our economic fragility. Is this the start of a deeper downturn, or a necessary correction after years of rapid growth? Experts are divided, and the future remains uncertain. Workers once held the upper hand. Job hopping, rising wages, and signing bonuses were the norm, a stark contrast to today's reality. Now, the conversation has shifted to job security, budget cuts, and layoffs as companies tighten their belts. For many, especially those who entered the workforce during the boom, this is a new and unsettling experience, filled with anxiety and doubt. The impact is widespread, from recent graduates facing uncertainty about their future, to factory workers with cut hours, struggling to make ends meet, to small business owners struggling to keep staff and stay afloat in these challenging times. Tonight, we go beyond the headlines to understand what this 4-year high in unemployment truly means for our society. We'll explore the forces driving this change, the people most affected, and what could come next in this unfolding economic story. This is a story about the health of our nation's economy, and at its heart, the American worker, who is the backbone of our society. The stakes have never felt higher, and the path forward is fraught with challenges and opportunities alike. An unemployment rate is more than a percentage, it's millions of stories of anxiety and resilience. When unemployment hits a 4-year high, it means neighbors and friends have lost their livelihoods. The loss of a job is both an economic and personal shock, shaking a person's sense of identity and stability. The ripple effects hit entire households. Budgets are slashed, vacations canceled, and essentials become harder to afford. For many, the fear is now daily reality. Savings dwindle as costs stay high. Lower wage and service workers are hit hardest, often living paycheck to paycheck. Unemployment benefits rarely cover previous incomes, forcing dramatic lifestyle changes. The psychological toll is immense. Self-confidence erodes, and job searches become grueling. Rejection is common, optimism fades, and the human cost is hidden behind the data. It's the quiet desperation of parents shielding their children from worry. The future feels uncertain for millions of American families. The hiring slowdown isn't equal across all sectors. Some are hit much harder. Tech, once a job growth engine, is now contracting, with layoffs common as investment and ad revenue fall. Construction and real estate are reeling from high interest rates, stalling projects, and cutting jobs. Transportation and warehousing, which boomed during the pandemic, now face overstaffing and job cuts as e-commerce demand wanes. Retail and hospitality see cautious consumers, leading to reduced hours and hiring freezes. Businesses are wary, watching costs and foot traffic closely. Millions of Americans in these industries are on the front lines of a slowing economy. The boom times have faded, replaced by uncertainty. The labor market's pain is concentrated, but its effects ripple everywhere. To understand the job market's chill, look to the Federal Reserve. For 2 years, the Fed has fought inflation by raising interest rates, making borrowing more expensive. The goal: slow spending, cool demand, and bring prices under control, a delicate balancing act. Now, higher rates are hitting businesses hard. Expansion plans are shelved, hiring slows, and layoffs begin. Consumers feel it too. Higher credit card, auto loan, and mortgage rates mean less disposable income. As spending drops, businesses cut costs, often starting with payroll. The Fed knew some labor market pain was inevitable, aiming for a soft landing. But with unemployment rising, the risk of a deeper recession grows. The central bank walks a tightrope. Keep rates high and risk recession, or cut too soon and risk inflation's return. The stakes for workers and the economy are enormous. The era known as the Great Resignation has officially ended. Workers no longer hold all the cards as they once did, and the landscape for job seekers is changing rapidly. The job market has shifted significantly, with power and leverage now moving back into the hands of employers. who are setting the terms more than before. With fewer open positions available and a growing number of applicants, competition for every job is fiercer than it has been in years, making it much harder to stand out. Hiring is not only slower, but also far more selective, with companies extending the interview process, adding more rounds, and scrutinizing candidates more closely than ever. The days of quick job offers and lavish perks are gone. Negotiations are tougher, benefits are being scaled back, and remote work is no longer a guarantee for most roles. Companies are taking advantage of the cooling market to mandate office returns, knowing that workers now have fewer alternatives and less bargaining power. For many employees, this shift is a rude awakening. Confidence about job prospects is being replaced by growing anxiety and concern over job security. Even those who are still employed are now less likely to take risks or consider leaving, instead focusing on keeping their current positions safe and secure. The quiet quitting trend is quickly fading away, replaced by a renewed drive among workers to prove their value and become indispensable to their teams. The American workforce is undergoing a major psychological adjustment as the balance of leverage shifts back to employers, changing how people think about their careers. The job search process is now longer, more stressful, and filled with greater uncertainty, requiring more patience and persistence from job seekers. In this new reality, adaptability and resilience are more important than ever, as workers must learn to navigate a tougher, more demanding job market. Financial markets are flashing warning signs as unemployment rises, casting a shadow over economic stability. Wall Street's initial hope for a cooling job market has turned to fear of recession after a sharper-than-expected jump in joblessness, shaking investor confidence. Investors now face a dilemma. A mild slowdown could mean rate cuts and a market boost, but a rapid downturn threatens profits and stock values, creating a precarious situation. Volatility reigns. Markets swing wildly with each new economic report, leaving traders on edge and uncertain about future trends. Corporate leaders are cautious, lowering earnings forecasts and signaling the end of predictable growth as they brace for potential economic turbulence. The Fed is under intense scrutiny, balancing its dual mandate of stable prices and maximum employment while navigating a complex economic landscape. Every word from policymakers is dissected for clues about future rate moves as analysts seek to predict the Fed's next steps. The market's reaction amplifies pressure on officials to get it right, as any misstep could have significant repercussions. The stakes are high. Avoid a deep recession without reigniting inflation, a delicate balance that requires careful maneuvering. The mood is anxious, and uncertainty dominates the outlook as everyone waits to see how events will unfold. The next moves will shape the economic narrative for months to come, influencing decisions and strategies across the financial world. Beyond Wall Street, rising unemployment is a crisis at kitchen tables nationwide. A lost job means bills keep coming, but paychecks stop. Families scramble to stretch savings. The emotional toll is heavy. Stress strains relationships, and children sense the anxiety. Daily routines are upended, and the presence of an unemployed parent is a constant reminder of uncertainty. For mid-career professionals, layoffs threaten identity and stability. For young workers, dreams are put on hold. For older workers, retirement plans are derailed. Families face heartbreaking choices, cutting activities, delaying medical care, or even selling their homes. These are not just economic decisions, but deeply personal sacrifices. The rising unemployment rate is a collection of painful human stories. The impact is real, immediate, and life-altering. Despite alarming headlines, many economists urge perspective. This isn't a 2008-style collapse, but a necessary cooling after years of overheated growth. The labor market is rebalancing. Job openings once far outpaced workers, fueling inflation. Underlying strengths remain household savings, solid corporate profits, and steady demand in sectors like healthcare and education. The economy is slowing, not shutting down, a transition from sprint to sustainable jog. Policymakers see rising unemployment as evidence their inflation-fighting policies are working. The goal, a stable, sustainable period of growth, not crisis. The challenge is to manage the transition, minimizing pain and avoiding a deeper recession. It's a period of risk, but not doom. As 2025 ends, the American economy stands at a crossroads. The era of rapid job growth is over. Uncertainty now defines the landscape. The key question: will we see a gentle glide to stability, or a painful descent into recession? Workers must adapt. Competition is fierce and security is prized over risk. For the unemployed, the road back will be longer and harder. policymakers face tough choices: when to cut rates, how to support families, and how to avoid reigniting inflation. The next 6 months will be critical in shaping the outcome. Economies move in cycles. Now we must manage the slowdown with foresight and compassion. Millions feel the chill, even if the data says cooling, not collapse. The story of 2026 will be written by the choices we make at this turning point.